Here's something that sounds completely backwards. The wealthiest people in the world spend money differently than everyone else. Not just more carefully. Differently. On completely different things. And the gap between what rich people buy and what everyone else buys has almost nothing to do with the amount of money they have. It has everything to do with what they believe money is for. Most people use money to buy things. Rich people use money to buy something else entirely. And once you see the difference, you cannot unsee it. If you're someone trying to figure out how money actually works, hit the subscribe button and give this video a thumbs up if this helps. Let's start with the most obvious one. The one that sounds simple but runs deeper than most people realize. Rich people buy time. Not metaphorically. Literally. When a wealthy person's income reaches a certain level, the first thing they start purchasing is hours back in their day. A cleaner. A personal assistant. A meal delivery service. A driver. Tasks that consume time get outsourced immediately. Now here's what most people think when they hear this. That's a luxury. I can't afford that. But here's the thing. Research from Harvard Business School found that people who spent money on time-saving services reported significantly higher life satisfaction than those who spent the same amount on material things. Not richer people. All income levels. The difference is mindset. Most people see paying someone to clean their house as an unnecessary expense. Wealthy people see it as buying 4 hours back to work on something that generates 10 times that cost. Time is the only asset that cannot be replaced. And rich people treat it that way. But here's where it gets really interesting. Because the second thing rich people buy is something almost nobody talks about. They buy other people's knowledge. Books. Courses. Coaches. Mentors. Masterminds. Wealthy people spend consistently and deliberately on learning. Not entertainment. Not distraction. Specifically on knowledge that produces financial returns. Warren Buffett famously said he spends 80% of his working day reading. Bill Gates reads approximately 50 books per year. These are not people who lack information. They are actively purchasing more of it because they understand something most people don't. Knowledge compounds exactly like money does. A $20 book that teaches you one principle that saves you $10,000 in a bad investment decision has an infinite return on investment. A $500 course that teaches you a skill that earns you an extra $2,000 per month changes your financial trajectory permanently. But most people won't spend $20 on a book. They'll spend $20 on lunch without thinking twice. And the difference in those two decisions, repeated over years, creates an enormous gap in outcomes. Now let's talk about the third thing. And this one is the real separator. Rich people buy assets. Poor people buy liabilities pretending to be assets. Here's the definition that matters. An asset puts money into your pocket. A liability takes money out. Rich people obsessively ask one question before spending. Will this make me money or cost me money over time? A car feels like ownership. But it costs insurance, maintenance, fuel, and depreciates the moment you drive it away. It is a liability wearing the costume of an asset. A house feels like an investment. But if you live in it, it costs mortgage, maintenance, taxes, and repairs every single month. The bank owns the asset. You own the liability. Rich people buy rental properties that generate monthly income. Index funds that grow while they sleep. Businesses that run without their daily presence. Royalties. Intellectual property. Things that produce. Robert Kiyosaki built an entire philosophy around this single distinction. And the reason it resonates with millions of people is because nobody teaches it. School teaches you to get a job and spend your salary. It never teaches you to buy things that pay you back. The fourth thing rich people buy is something that sounds counterintuitive. They buy protection. Insurance. Legal structures. Accountants. Estate planning. Wealthy people spend significant money making sure that what they build cannot be easily taken away. They create LLCs to protect personal assets. They hire tax professionals not just to file returns but to legally minimize what they owe. They ensure income streams, not just possessions. Most people see these as expenses for people richer than them. Something to think about later. But here's the painful truth. Most people lose wealth not because they failed to build it, but because they had no structure protecting it when something went wrong. A lawsuit, a medical emergency, a tax mistake. One event can erase years of progress without the right protection in place. Rich people buy protection early, because they understand that building wealth and protecting wealth are equally important. And the fifth thing, the one that ties everything together. Rich people buy equity, not stuff. When most people get extra money, they upgrade their lifestyle. A nicer car, a bigger apartment, better clothes. When wealthy people get extra money, they buy a piece of something. A stake in a business. More shares. More property. More ownership. Equity means you own something that grows independently of your effort. That works while you sleep. That builds in value over time without requiring your daily presence. Every dollar invested in equity is a dollar working for you. Every dollar spent on lifestyle is a dollar that worked once and then disappeared. The entire gap between building wealth and staying stuck comes down to this one habit applied consistently over time. Buy ownership. Not experiences pretending to be investments. So here is what this actually means for you right now. You don't need to be rich to start buying what rich people buy. Start small. Buy one book this month instead of one takeout meal. Automate one investment transfer, however small. Learn one skill that increases your income. Cancel one subscription and redirect that money into an asset. Because wealth is not built by earning more. It is built by consistently choosing different things to do with what you already earn. And that choice is available to you right now regardless of your income level. If this changed how you think about spending, hit subscribe. And tell me something. What is one thing you currently spend money on that you now realize is a liability disguised as something else? Drop it in the comments. The answer might surprise you.